focus back to earnings, and joining me right now, Tarak Patel, the MD at GMM Pfaudler, joining in on the show right now. Tarak, hi, morning. Good to have you. And I can see you've posted a decent revenue growth this quarter. Which segment and geographies drove it?
So as you can see, we've seen significant improvement year on year as well as quarter on quarter in terms of revenue growth. This revenue growth has really been driven by our international business due to strong execution, pricing improvement, and also, there has been obviously improvement also in terms of the EBITDA margins, right? This was mainly due to lower energy costs in Europe now, so we are seeing some benefits as well. The India business has been stable. Obviously, there has been a slight slowdown in India due to the chemical the industry, which is obviously going through a little bit of a tough patch. But overall, I think it's a very strong performance. We start the year on a strong note, and we are on track to meet our FY25 guidance.
All right, that's good to know. But your order intake has seen a bit of a slowdown, and that's largely on account of the chemical segment. What are the kind of conversations you're having with the clients? When do you anticipate a recovery?
So yeah, exactly. That's what we're trying to, and we have been speaking to a lot of our clients here in India. So there's definitely a slowdown at the moment. This is obviously caused by overstocking in supply chains across the world. There has been some pricing pressure from China as well, and the commodity prices have been going up and down, right? Overall, even though there is this challenge in the short term, I think most companies who planned investments will continue with their investments. I don't think there's any change in the investment plan. Some of the, the decision making, which were maybe a little bit faster, maybe a few months ago, has slowed down a little bit. But like you rightly said, I think end of this financial year, maybe Q4 of this year, you will see some recovery. And then we also expect pharmaceuticals to kind of pick up as well, right? And from our perspective, we have a strong backlog. Our backlog is close to about 2,000 crores. So that gives us about 8 months of visibility in the international business, 5.5, 6 months here in India. We are definitely more aggressive in the market as well, and being the best player in the market is obviously easier for us to win business. So I think that's something that over the next few months we will be trying to kind of increase and improve our backlog.
Right. Steel constitutes, Tarak, major part of your raw material, right? With volatility now in the prices, how do you see the margin trajectory pan out for you? And does the FY24 guidance of 14% stay intact?
So we're working on a lot of internal measures. Like I mentioned to you, the market is a bit slow, so the competitive intensity will increase. Like I said before, also, we are the market leader. We are the technology leader. So customers will want to go with us. So we do definitely have a preference there. Having said that, there will be some pricing pressure, but we hope to make that up with some internal kind of efficiency improvements that we're looking at, cost controls as well. And as you know, we've kind of diversified as well. Over the last maybe 3 to 4 years, we've added on bolt-on acquisitions. We've diversified the product, the portfolio. So we are not only dependent on chemical and pharmaceuticals, right? So we have a much wider kind of profile now. And lastly, I think our services business, very highly profitable, very sticky business, accounts for nearly 35% of our international revenues, right? So that business will continue to grow, and that will give us some buffer when it comes to margins.
Okay, Tarak, what's the outlook on the synergies from Bolt on the acquisition by the company in FY23? Are there any acquisitions in the pipeline?
Yeah, so the synergies will definitely continue to add up. I think that's something that is an ongoing process. We completed the acquisition of Mixel a few months ago. That integration is definitely ongoing. We are looking at mixing as a very important part of our growth strategy. There's one more acquisition that we are looking at in the North American region. We expect that to kind of close in the short term. Not a very large the acquisition, but in terms of manufacturing footprint, it will give us a presence in North America, and that will kind of build a global play for us in the mixing business.
Right. Debt level for you also has risen from what we saw in FY21. What is the current debt stand at, and what are the plans to reduce it?
So I believe that debt levels are very much in control. The last time the debt went up was when we completed the acquisition of the 46% stake of the international business. That was maybe last year at some point. Since then, we've been repaying debt consistently. We believe that by the end of FY25, our debt levels should be down to very low levels. Even now, today, we are very comfortable. We're less than, I think, 1 time. So I think I'm not too kind of worried about the debt levels. And even the acquisitions that we are doing and we have done are through internal accruals, right? So we do generate cash, and over the next few quarters, few years, we will definitely repay this down.
All right. Thanks so much for taking time out and joining in. Tarak, good to have you on board. Sandeep Sabharwal is with us on